Buckle up, everyone. You are strapped in and ready for the Insurance Hour with me, your host, Carl Susman, informing, educating, and entertaining Californians one policy at a time. This is Insurance Hour. Hello. This is Insurance Hour. I am your host, Carl Susman. Thank you so much for being here. Thank you so much. Phone lines are open. 559-656-0317. You can call or text that number, or you can send us a question in to questions@insurancehour.com. If you want to join our text group, you can. Just send a text to 567-4CARL. That's 567-367-5275. We want to keep you in the loop with everything insurance related. We don't spam you, don't worry about that. But if you're looking to get information, it's a great resource. I think it's a great resource anyway. Today we are going to jump right in and we're going to go through listener emails because again, I'm way behind on them and I do not want to ever miss any. So if we get calls, we'll take a break from the emails. We'll go right back into them after the call. For right now, let's get right into the first email. To save time, I had some great feedback, by the way, from last week's show. People were saying, you know what? I don't need to know what the person's name is on their email. I don't need you to specifically read the entire story. Just get to the question, give us the answer, and let's move on from there. So I've gone through and I've edited these down a little bit to their component parts. So hopefully you're going to hear just the question itself. You'll understand what they're asking, and we'll be able to go from there, all right? So first one says, I'm a new driver and my car insurance premium are high. Is there any way I can lower my rates? It's a good question. One of the things that we find in the insurance world is that insurance companies like to charge premium based on what the actual risk is. And what do you suspect would be a higher risk if you're going to be insuring a driver? Would it be someone that's been driving for 20 or 30 years or someone that has just received their license in the last month or two? Well, it makes logical sense. The person that has just received their driver's license probably more likely to be involved in an accident than someone that has more experience, a little more driving experience under their belt, right? So what can someone do that's just received their driver's license and their premiums are high? Well, the first thing to do is realize why. And hopefully I've helped to explain that. It's not that you're being discriminated against. It's simply a matter of statistics. And the odds are less experience, not as good a driver. More experience, a better driver. Now, that curve actually does shrink because when you get to a certain age, it starts to go the other way. Our reflexes start to slow down as we get older. We might need glasses or thicker glasses or contacts or who knows what. And eventually, there's some arguments that are out there that after a certain age, people should not be allowed to drive because their reflexes are so slow and just in general, they're not safe behind the wheel. So first of all, you have something in common with your elders, right? You're paying more for insurance. So what can you do to save money as a young driver? The first thing that you can do is check with the insurance company and find out if they have any discounts that you're eligible for, even though you're a younger driver. For example, younger drivers tend to be in high school. One of the things that insurance companies will do is they will offer good student discounts. Good student discount basically says that, look, this is and again, it depends on the insurance company. It could be A average, B average, it just depends, but they're going to have better than average GPA. Statistically, the insurance carriers have found that those students tend to be better drivers than those that are not. Who knew? Well, you know now. Those are discounts you can look for. You can call the insurance company or check with your agent or broker, find out, is there a good student discount? Another discount you might be able to get has to do with the vehicle usage. Now, some insurance companies will assume the most expensive car that is on the insurance policy, even if it's the one your parents might be driving, is the car that you're driving. What you want to do is make sure that the insurance carrier knows which vehicle you're driving. A lot of times parents will buy or a used car or a less expensive car than they're driving, which makes sense, right? They've earned it, hopefully. And you're getting charged a premium or to the point maybe your parents are, where the insurance carrier is assuming that you're on the more expensive vehicle that you're driving. It's called being rated as the highest rated driver. So what you can do is let the insurance carrier know you don't drive that car. You drive the other car, the less expensive car. That can make a huge difference. Another thing you can do to save money is check out the usage. Are you just driving your car after school? Do you basically just take it to your friend's house and back? Or maybe you run an errand or two with your parents and that's really it? Or Are you driving the car to school every single day and to football practice and to water polo matches that you like to support? The amount of time you actually spend on the road, and this is measured by the odometer reading of the vehicle that you primarily drive, is something that can drive the insurance cost fairly significantly. So check on that. Find out about the usage of your vehicle, how many miles the insurance company is assuming that you're driving. Be sure that it's the vehicle you're actually driving and not just the one that happens to be the most expensive. Okay? Hopefully that helps. Next question is, what's the difference between term life and whole life, and which is better for a young family? Well, we could do an entire show on life insurance. There's always a few questions that come in that I'm reading through that are about life insurance. And there's two types of life insurance in very general terms. There is terms, what a pun, in very general form, right? You have life insurance for a particular period of time, or it's called a term, and you have life insurance that is designed to go longer than a specified term, okay? Now, term insurance tends to be inexpensive, meaning less expensive out of pocket than permanent insurance. And that makes sense because it's for a finite period of time, and they tend to only be offered to younger people, right? You can't be 80 years old and buy a term policy because not going to happen. Whereas permanent policies, which could be whole life or universal life, are designed to be in force until you die, with several caveats between, but in general, they're not with a specific expiration date. Unlike you and I, we have a definite expiration date. Those permanent life policies don't necessarily all have that. Now, those policies, the permanent policies, may be more expensive out of pocket. However, you're getting more benefits from those because you're getting the ability to have cash accumulating in the policy, cash that you might be able to access while you're alive. Whereas term insurance, the only time term insurance is going to pay a penny is if you die. If you die, then the benefits from the life insurance policy get paid out. Versus in a permanent policy, if it's a cash building policy, when you're alive, you may have the ability to take money out of that. To your question, which is better for a young family? It's going to depend. It's going to depend on your finances. It's going to depend on what it is that you're looking to accomplish. It's going to depend on a lot of factors. So the best thing to do is talk to a licensed life insurance agent or broker. Tell them what it is you're trying to accomplish. Tell them what your goals are and let them navigate you through the process. You don't want to make a mistake because it's a long-term commitment either way. Let's take a quick break. When we come back, we'll get back to your questions. This is Insurance Hour, and I'm your host, Carl Susman. We will be back in a flash. Let's talk about earthquakes for a minute. Look, we know we live in earthquake country here in California. Powerful, devastating earthquakes have happened here before, and science says that they will happen again. They can't tell us exactly when. They can just tell us that it is going to happen. Count on it. Prepare for it. Did you know that earthquakes are not covered by your homeowner's insurance policy? You need a separate policy to give you the peace of mind that you will be able to recover without getting financially wiped out the next time we get hit with a big one. There is a great company here in California that will provide you with earthquake coverage you need at a price you can afford. That company is GeoVera. I have a policy through GeoVera. I really like how easy it is to choose from all of their great coverage options, backed by the financial strength that lets me know that they will be here for me when I need them the most. Go to getquake.com/insurance hour to learn more. That's getquake.com/insurance hour. Make sure you're ready for the day when the ground shakes again. Hello. This is Insurance Hour. I am your host, Carl Susman. Thank you so much for being here today. The phone lines are open to call in with your insurance-related questions. Give us a call, 559-656-0317. You can call or text that number, or you can text our text group if you want to get some updates on insurance topics. Just text to 567-4CARL. That's 567-367-5275. We are going through listener questions via email today, and there are a lot of them. We're also taking your calls, don't worry, so you can call in right now. If the phone line's busy and you go to voicemail, you can leave a voicemail with your question. Also, please be sure to let me know whether you want your question played on the air or if you just want me to summarize it for you, okay? We talked about life insurance before the break, and now we're moving on to the next question. Do I really need renter's insurance if my landlord already has insurance on the building? That's a good question. First, the really need kind of makes me think, what does that mean? Do I really need it? Like, do I really have to have that policy? Well, at the end of the day, sometimes you have to and sometimes you don't. But whether you need it is really more of a personal choice. But let me address this particular question. Now, if the landlord has insurance on the building, that means that in the event of a loss to the building, the landlord has protection. Good for the landlord. That's not going to do anything for you. That doesn't change anything for you, as a matter of fact. If that building burns to the ground, let's just say, or a pipe breaks and water comes all over the place and damages your stuff, the landlord's policy is going to take care of the landlord's stuff, not your stuff. And yes, there are some exceptions to that, but for the most part. Now, what a renter's insurance policy is going to do is it's going to protect you and your stuff. You know, all the stuff you had your friends carry those boxes around, all of your precious stuff. Yeah, what'd you do? What'd you give your friends for all that help? Some pizza? What is the going rate for dragging a friend to help you move? How many times have I heard that the real friends are the ones that show up when you have to move? That's the barometer for what a real friend is, if they show up to help you move and we give them pizza. I think that's pretty much the going rate for helping a friend move. I digress. So renter's insurance is for you and landlord insurance is for the landlord. So your question, do I really need it? Probably you do if you've got stuff. Next question. If I work from home, does my homeowner's insurance cover my business equipment? This is a great question. There's this new thing, maybe you've heard about it. It's called work from home, remote work, all that good stuff. Work from the beach, as it's known, or work from anywhere. Wasn't there a company that tried to do this before the pandemic, WeWork? And the idea was you were supposed to leave your house to go to another place to work remotely from your employer. Now that I say that out loud, it sounds sort of stupid. Maybe that's why it failed. At any rate, working from home has its advantages and disadvantages, and one of them is probably just because it's overlooked. Now, the question specifically is asking, I don't want to misread it, is, will my homeowner's insurance cover my business equipment? Now, the answer is it depends on your homeowner's insurance policy. However, the vast majority of them will give you a tiny bit of coverage for your business property, a little bit, like $1,000 or $2,000, right? It is not going to cover the 4K monitors that you have plastered against your wall, your VoIP phone, your 4K camera, all that fancy stuff. You're going to have a cap on that if you have coverage for your business equipment on the homeowner's policy at all, which you might not, okay? So it's important to get an insurance policy that's going to cover that equipment in your house. Now, take a step back. It's possible your employer already has coverage for their equipment in your possession. So before you run out and buy a policy to cover that equipment that you're using for business purposes, if that equipment is not yours, if it belongs to your employer, check with them and find out. Say, am I responsible in the event this equipment is lost or damaged, or do I need to obtain insurance potentially for that? Find out. You might need it, you might not. But it's important to be aware of. One thing I can tell you is also very important when it comes to work from home. I have to bring it up even though it's not in the question, is any type of exposure liability-wise. For example, if you had a customer come to your house, let's say, and they fall and get hurt, your homeowner's insurance policy is not going to protect you from that. That is a business exposure, and homeowners insurance policies do not cover business exposures. Now, this is always the question that comes back. Well, what if FedEx is dropping something off for the business? That's business related, but we need to get in the weeds on that. Just understand, in the event of a claim, homeowners insurance policies are there to cover exposures that you have that are non-business related. Business insurance policies are designed to protect you for things that are business related. If you keep that in mind, in general terms, you'll be okay. But when in doubt, check with your agent and broker and find out what's covered under your homeowner's insurance policy. Next question. How much coverage should I have on my homeowner's insurance policy? This is so generic, I'm not sure even where to go with it, but I want to at least give it some attention. What to have on your homeowner's insurance policy depends on the home, right? And you. Remember, homeowner's insurance policies it's a blanket of many, many different types of coverages. It'll cover the structure. It can cover personal property. It can pay for you to move out in the event of a claim into a motel while they're doing work on it. It can cover your house if it's on fire. It can cover your house if a pipe breaks. I mean, there's so much going on. If somebody trips and falls on the front driveway and sues you, there's so much that tends to be in it. It's difficult for me to tell you specifically what coverage and how much of it you need. This is where it's important to talk to a licensed professional. So find a local agent or broker, talk to them, say, this is my house. This is me. This is the stuff I have. This is what my house is. These are what my exposures are. And work together to find the type of coverage that you think is going to best protect you. People have different tolerances for risk, right? Some people say, you know what? A couple grand, if that happens, I'm not going to file a claim. So they can carry a higher deductible. Some people can't afford to do that. They need to know that in the event of a claim, the insurance company is going to pay as close to first dollar as possible. You have to have these conversations with the professionals and have them find a policy that will suit your needs as closely as possible. Next question. Is it worth getting pet insurance for my dog, and what does it typically cover? Oh, pet insurance. It's so funny with pet insurance because being in this industry my entire life, you would think that I would have one particular opinion about most insurance policies, which is they're good, please buy them. That's how I make a living. But it's a little bit different. My relationship with pet insurance is a little bit different, and I'll tell you why. Pet insurance is one of those strange types of policies that is not regulated and watched over with the same eyes that most, for example, automobile policies are. So it is really buyer beware, because you might think you're buying a policy that covers something that absolutely does not. And I think this warrants taking a little bit more time, but we do need to take a break. When we come back, I want to talk a little bit more about pet insurance, things to be aware of, things to look out for, and some options that are out there that you probably do want to have, and roughly what it might be looking like to cost. This is Insurance Hour. I am Carl Susman, your host. We will be back in a flash. See you then.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the WindowToTheMagic.com podcast.
Maybe there's a name for this, something like Disnotic Obsession. Please visit WindowToTheMagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. You are learning from Insurance Hour, and I am your host, Carl Susman. Thank you so much for being here today. The phone lines are open. Such a long-standing saying. The phone lines are open, as if they're ever closed. Give us a call at 559-656-0317. Get us your insurance questions. Let me do my best to answer them for you. You can also send us an email with your questions to questions@insurancehour.com. If you want to text us, go for it. 5674-CARL. That's 567-367-5275. It's Carl with a K, by the way. I think someone that might have their name spelled with a C, they have it spelled wrong, just so you know. It should be spelled with a K. And certainly if you're looking to text the number 567-367-5275, and it's 5674-CARL, if you're texting 5674-CARL with a C, you will not get us. And I'm sorry for whoever has that number, who's probably getting every once in a while some errant text messages. Okay, we were talking about pet insurance. Now here's the thing with pet insurance. Because there's not, how's the best way to put this? Because there's not so much competition in that marketplace. We're not talking about dozens or hundreds of companies that write it. The types of competition that exist are small. When there's less competition, what tends to happen to the product and the price? You'll have less coverage and higher prices. Pet insurance also is one of the strange types of insurance where as your dog gets older, the price goes up. Kind of odd, because as the dog gets older, I'm saying dog, it could be another animal, of course, but I'm a dog person. That's just the way it is. Don't even get me started. So as the dog gets older, the price goes up. as the dog more than likely would need some type of health care, or there might be some procedure that it needs, you're going to be paying more. If you get a puppy and you start paying for pet insurance, for the most part, based on the quick and dirty math that I've done a few times, unless something happens to the dog early on in life, you might end up paying more for insurance than you're going to be getting out of it. And I know that's a horrible thing to say, because you don't want to buy a policy hoping you're going to need it, because that means something happened to your pet. But unfortunately, with pet insurance, it's a challenging one. It's a challenging one. Now, I would check with 3 or 4 of at least insurance companies before you decide which company to purchase pet insurance from. It might be challenging to find that many, but look hard and find out certain things. Number one, how long is the premium good for? Is it a short period of time? Is it a longer period of time? Does it go up every year? Is it brackets of 5 years? That stuff matters. Also, some insurance companies will charge different premiums based on the breed of your pet, which again, that makes sense. That's called underwriting. We do that with people as well, right? So I guess at the end of the day, pet insurance is one of those things where if you really want to invest the time and you really want to put on your big boy pants or big girl pants and figure out the cost analysis, what you're going to pay, what would need to happen for it to pay off for you, then it might be something worthwhile. But if you're not going to really do that, you might be spending money that won't necessarily make you come out ahead. Let's put it that way. Enough about pet insurance. Next, well, it's a health insurance question. Can I keep my health insurance if I lose my job? Well, this is an interesting one. The Affordable Care Act and some additional regulations and laws that are in place do mandate you to be able to maintain your health insurance, assuming that it's a group policy that you're on, for a period of time after you leave employment. Now, it doesn't matter if you're fired, doesn't matter if you quit, doesn't matter what the situation is. Actually, I'm going to put a pin in that. It might be a little different if you quit, but I don't believe that there's a significant difference. But I'm going to put a pin in that and find out for sure. The point is, if you leave your employer, you should be able to be in a position where you can maintain your insurance, your health insurance through them. If not, then you can go to the Affordable Care Act, again, depending on the time of year, because there's open enrollment periods. It's a whole thing. And I am not a health insurance expert, so I don't want to get too deeply involved in that topic. But there are options. So it should not be a determining factor. Do you stay at your job because of health insurance? And we are a unique country insofar as that is an element that people have to consider. It's a tough pill to swallow. Oh, another pun for the day. Sorry about that. But again, for the most part, there's something called COBRA and the Affordable Care Act. In between those things, you should be able to find a way to get some insurance for yourself while you're in between jobs. All right, next question. How does an umbrella insurance policy work, and do I need one? I think we had an umbrella question on last week's show, now that I'm thinking about it. Well, let me tell you what an umbrella does not cover. Everything. And I think that's a bad name for a type of insurance policy, isn't it? An umbrella. Because does that not give you the impression that it's going to be on top of everything? Well, it's not. It's on top of your liability exposure. So this is the liability that protects you in the event of lawsuits. Okay, this is something you're going to see an umbrella policy being triggered for. Now, interestingly enough, it was rare years ago for an umbrella policy to have a claim, because you would have to exhaust your underlying liability insurance before that would trigger coverage on your umbrella policy. Now, especially depending on certain districts where lawsuits are happening, umbrella policies are literally being tapped on frequently. This is not something that insurers are necessarily comfortable with, because the products are not priced that way. It's difficult to price $1 million, for example, if that's an umbrella policy, because how do you price $1 million if the likelihood is you're going to be paying out something in the next 5 or 6 or 10 years? No one's going to be able to pay for it. So umbrella policies are good to get if you can, and if you can get them at a reasonable price. I think that's where I'm going to stay when it comes to umbrella policies. Oh, I thought we had a call in. We did not. I just had somebody whispering something in my ear. Next one. What's the best way to compare different health insurance plans? Oh, this is a good question. Even though I'm not a health insurance expert, I will tell you, like I would say to most people about most types of insurance, if you're looking to compare policies, you're looking to compare products, talk to an independent agent or broker about it. Yes, there is no shortage of online tools for health insurance to be able to compare plans. But with health insurance especially, it's kind of pointless because you have to qualify for the plans. And again, there are underwriting actions that can go into place that might affect your premium as well. Not only that, depending on where you're purchasing the policy, if, for example, you're purchasing it through the Affordable Care Act, through the ACA, then the premium might be dependent on your income. So there are an awful lot of factors involved in health insurance. And I tell everyone this, if you're going to be looking for health insurance, please talk to a licensed agent or broker, specifically one that works in the health insurance field. It is a dynamic field. It is changing a lot all the time. And it's a big decision. You want to make sure that you make the best out of your choice for a health insurance carrier. With that, we're going to take another quick break. And then when we come back, more of your calls, more of your emails. You are learning from Insurance Hour. And I am Carl Susman. Be right back.
Have you been dropped by your insurance agency or seen your premiums skyrocket? Susman Insurance is here to help. We're a family-owned and operated insurance agency that's been serving our community for 2 generations. At Susman Insurance, we know how stressful it can be to find the right coverage, especially when prices go up or you're left without insurance. That's why we're committed to finding you competitive rates, whether it's for fire, home, earthquake, flood, auto insurance, you name it. We've got you covered. Give us a call or send a text to 310-820-5200 or visit us online at susmaninsurance.com. Plus, stay updated on all things insurance by joining our text group. Just text 567-4CARL with a K. That's 567-367-5275 to get the latest updates straight to your phone. Susman Insurance, your family's insurance solution.
Hello. You are learning from Insurance Hour. I am your host, Carl Susman. Thank you so much for being here today. Listen, if you've missed any part of this show, there is a lot of good information that you want to get. So jump online, search for Insurance Hour. You'll find us pretty much everywhere, on local radio, on YouTube, on Spotify, Apple Podcasts, TuneIn, you name it. We're out there. Find the show from today and go back and listen to all of it because there's a lot of good stuff in there, a lot of good information. All right, phone lines are open, 559-656-0317. You can call or text that number basically 24/7. I will not answer that call 24/7, but you will get a voicemail. You can leave your question there, and I'm happy to address it the next show that we have coming up, which is exactly what I'm doing now. Because these are people that have emailed their questions in to questions@insurancehour.com, and I am reading those questions and giving you the best answers that I can. And with that, let's get back to it. If I am involved in an accident with an uninsured driver, will my auto insurance cover the damages? I put an emphasis on my auto insurance, but that's not how it's written. Uninsured drivers are a difficult aspect of driving right now because auto insurance countrywide is really in flux and rates are all over the place. It used to be that most carriers were in a similar range for what they charged for auto insurance, and that range not only has moved up, but it's also starting to spread out. So you're going to really need to look hard to try and find a carrier that's going to be less expensive, for example, this year than it was last year. So someone that's driving without insurance, first of all, I believe all 50 states have what are called financial responsibility laws. That means that there is a law that says you need to either have insurance or post a bond or something similar in order to drive on public roads. Now, not everybody does that. So what happens if you have an accident, the other person does not have coverage? This is going to vary based on state. Some states you can purchase what's called uninsured motorist coverage. Basically, you are carrying coverage on your policy that's going to pay what the other person's insurance, if they had it, would have paid. Other states have no-fault insurance or personal insurance protection, PIP insurance. And what that will do is you're always driving around with coverage for yourself. Doesn't matter if the other person has a policy or not. You have coverage for you, the other person has coverage for them. So uninsured drivers are very much dependent how your insurance policy is going to be triggered based on what state you're in and the type of policy you have in that state. Some states also have issues with not just uninsured drivers, but underinsured drivers. Now, an underinsured driver is a driver that's carrying small limits of liability. We call them baby limits that maybe somebody would get just to be legal on the road, but in reality, it's far from sufficient coverage to have in the event of an actual loss. And again, depending on the state you're in, some policies will pick up the difference between the policy amount that the other person is carrying and the amount that you need. That would be underinsured coverage. Okay? Check with your local agent or broker. Getting a pattern here of what to do. Let's see what's next. Accident. Okay. How do deductibles work on an insurance policy? This is a fun one. Deductible. So you buy an insurance policy, you're paying a premium, and you have a loss. Well, the insurance company will not typically pay the first dollar of that loss. There is something called a deductible, which is the amount that you are, as the insured person, responsible for before the insurance company is going to kick in and pay money. Now, why do they do that? Well, several reasons, but the main reason is to prevent people from putting in small claims. Now, you might think, well, why do they care? If it's a small claim, it's a small claim. It might be a claim where the insurance company is responsible for paying, let's just call it $300. Okay, that's considered a small claim. Yeah, but in order for you to get that $300, the resources that are being utilized by the insurance company are enormous. You're talking about having to speak to a claims handler. You're talking about having to talk to a claims adjuster. You're talking about having a lot of man or woman power behind this for you to get that few $100s. So in order to prevent the usage of those resources, which are far more than $300, insurance companies have deductible options. Now, deductibles are also a good way to save money because the higher the deductible, the more of your risk you're willing to take for yourself and not go to the insurance company for, the lower your premium, which is super cool because sometimes you might say, you know what? I can absorb a loss that's a couple of $1,000s, right? If something like that happens, I'm not going to file a claim. I want to have my no claim discounts. I don't want the heartache. I don't want the hassle. I don't want to have a claim on my record. So the claims up to a certain threshold, I'm going to pay for myself. And if that's the case, you can save money by having a higher deductible. Makes sense, right? So again, deductibles, it's the amount of money, the amount of risk, in essence, you are keeping for yourself and not passing on to the insurance company. Follow me? All right, what is next? Should I get collision coverage on my older car, or is liability insurance enough? All right, well, we've got to clarify some things because I think what they're talking about specifically is not just collision, but it's physical damage altogether. There's two types of physical damage for a vehicle. There's collision coverage and comprehensive coverage. Collision coverage is going to pay for the vehicle if the vehicle's in motion. Comprehensive coverage is going to pay in the event the vehicle is damaged, not in motion, with an asterisk. So you're driving around, car's in an accident, collision coverage. Car's parked, tree falls on it, comprehensive coverage. The asterisk is most states will consider an accident where you have a collision with an animal as a comprehensive claim, even though the vehicle is in motion. The why is complicated. Don't worry about it. Just understand that if you're driving somewhere and you end up in a car accident, you've struck a large animal, then the insurance carrier likely is going to consider that a comprehensive claim, which typically will be to your advantage. I know, shocking to think, but that is the way it is. Now, when I say animal, you might be thinking, well, what kind of animal? We're not talking about dogs and cats typically. We're talking about deer, buffalo, bison. What other animals might be out there? It depends on where you're tuning into the show, I suppose, right? So again, liability is something you have to have legally, right? Some type of financial responsibility. And what they're asking is, on my car, since it's older, do I care about physical damage to the car? And the answer is, it depends on you. It depends on your threshold for risk. If you're okay saying, you know what, if this car gets into an accident, then I'm not going to worry about it, then okay, don't carry the coverage. But if you're going to need to get reimbursed to purchase another vehicle, you have too much invested in that vehicle, then you're going to have to continue carrying physical damage, not just collision, but physical damage on the car. You with me? Let's take another quick break. When we come back, we will get right back to your emailed in questions. You are learning from Insurance Hour. I am your host, Carl Susman. Phone lines are open, 559-656-0317. Questions can be sent anytime to questions@insurancehour.com, and we will be back in a flash. Stay tuned.
Boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello, hello. You are learning from Insurance Hour. I am your host, Carl Susman. Thank you so much for being here. Phone lines are open, 559-656-0317. You can also send your questions in to questions@insurancehour.com or shoot us a text to 567-4CARL. That's 567-367-5275. Hey, before I go on, I want to thank one of our sponsors, GeoVera. GeoVera is an earthquake insurance company that is, let me just make it simple. I've been an insurance agent and broker for over 30 years. I know. Look at me, you would never think that. But let's just go with it, all right? And I can get my earthquake insurance from any company I want. They all want me to purchase their coverage because they want the broker to represent that, hey, it's my company, I have it. I have, and I have always had, my earthquake insurance with GeoVera. Enough said. Go to our website, insurancehour.com. You're going to see a link for GeoVera. Go there, get a quick quote. Very inexpensive, very, very fast. Basic information is all you need to get a quote. Because let's face it, we do live in areas where earthquakes do happen. All right, I had to get that out because I am thankful for their sponsorship, and they are a terrific company.